Thinkorswim, right, is the trading system.
Okay.
TD owns Ameritrade, and Ameritrade in the US is the biggest trading platform. TD, then Fidelity, then like Charles Schwab. It's like one of the oldest and one of the best built. Other platforms, they entice you with, lower fees, extra margin, better rates, all that stuff. TD has always been just, we're the biggest, we're the best. For example, GameStop. If you wanted to do GameStop on Robinhood, they started excluding you. Thinkorswim will never do that. TD will never do that because they have the capital to back up any trade they do. That's the difference between TD's trading platform and everybody else's trading platform. They actually have capital to back up everything.
Robinhood's not bad if you want to trade options, though.
There are risks to using Robinhood. Like Robinhood will really, really poor customer service is one.
Oh yeah,
In cases,
they
yeah,
suspend trading for a day because they didn't program some data.
yeah, exactly. It's a new technology, right? There are risks with new technologies. In 10 years, Robinhood will probably be comparable to Ameritrade, but that's in 10 years. I don't really care about the service in 10 years. I care about the service now. And the service now it's good because it's free. It's bad because it's shit.
Just don't trade weekly options.
Yeah, that's true. Don't trade short term, don't trade high leverage. Don't do anything fun within Robinhood. Like if you just want to buy and hold and do leaps in Robinhood, yeah, Robinhood's fantastic. The only issue with selling options is you need a lot of money to back up the option you're selling because it's like the inverse, right? If you buy an option, you're buying the option to purchase it at a higher rate, but if you're selling it, you're selling the option to like 100 shares of the stock. So you essentially need the capital for 100 shares of stock in order to sell an option,
or you're on margin.
Yeah, or you're on margin, which
you probably shouldn't do that.
Yeah, you probably shouldn't do that. Yeah. Like either way, you need a ton of capital to actually sell premium. It's why the only people who do it are typically institutional investors.
Wealthsimple is not bad if it's only Canadian stocks. So like the moment you use US, you get screwed by fees.
Exchange rates.
It's good if you want to try to actively trade and you have a very small account. I actually read into how they make money, but they embed the commission into the spread for the price, right? So they hide it there. So it's good if you're buying like 5 shares and then you're actively trading around that, because then like a cent per share or something, right? Instead of $10 per trade. And then it's different from Robinhood, who sells your info kind of. So I mean, they're not actually free either, right?
Ameritrade is free
for trading.
Yeah,
it's only stocks, right?
Yeah, it's only stocks, not options. Options are hella expensive.
Even interactive brokers, like it goes per contract, right? So I think even for interactive brokers, it's like 65 cents per contract. No, it's because you have to pay certain CBOE or something. Like, so unless your broker subsidizes you, like Robinhood, like you have to pay. So it's pretty expensive, right? Especially if you do anything that's smaller. So if you don't have a shit ton of capital to like buy like $100 stock
or like $10 options, yeah. If you buy like 100 options at a time, that adds up.